Welcome to my day 3 of 25-minute walking while I talk about anything relating to finance and fitness. Today's topic is how to start investing with zero fear and no additional income. Does it sound like it's too good to be true? Normally when something sounds like it's too good to be true, I say run away. But hear me out. Let me take you back to my investment journey. Started back in 2016 with Robinhood, the app. Back in 2016, I decided to make one simple lifestyle change. Instead of going out to Starbucks every morning to get a cup of coffee and croissant and go out for lunch, I decided to make my own coffee, brew my own coffee, and bring my own lunch to work. With that one simple lifestyle change, I saved significant amount of money per week. For Starbucks, I spent anywhere between $3 to $5 every morning, 5 days a week. For lunch, I spent anywhere between $10 to $15 a week for 5 days a week. That's $50 a week that's available to me. That $50 a week, that's $200 a month or $2,400 a year. But with just one simple lifestyle change. Along with that saving, I took advantage of my local bank promotion where I've opened the checking account and have a direct deposit. They give me $300 in cash. That's what I did. That was my seed money to start my investment journey with Robinhood app in 2016. My logic was I wanted to get into the world of investing, but I don't want to lose and gamble my money away. That was my thought on investing back in 2016. That investing is only for the richest and investing is gambling. I didn't want to lose my money. So my logic was, since the $50 a week that I saved from not eating out, if I lose it, I was fine with it because I would have lost it by eating out anyway. And the $300 seed money from the cash received from my local bank, that was not my money in the first place. So I was cool with that. I was able to put the proceeds to good use. I purchased companies within the industries that I know and understand. And throughout the whole process, I learned how to evaluate what a company is worth compared to what the market is willing to pay. Even though I was okay with fail early and fail often, for me to learn and understand how the stock market worked, I was very fortunate. I was very lucky that the purchases that I made turned out to be great investments. Thanks in part due to when I invest in companies that I know and understand, even though I don't know anything about the financial aspect of it. But through my passion of learning, where I dedicated 1 hour per day, still to this day, to learn something new. So as I started to invest, as I started to buy companies that I know and understand, from a consumer perspective, from a professional perspective, I started to learn and understand what earning per share is. I started to learn and understand what PE is, price to earning ratio, the revenue, what they call the top line, the net income, what they call the bottom line, the ROIC, the return on invested capital. And I learned about the moat. I learned about TAM, total addressable market. I learned about how stock split work and buybacks, the intent and purpose of stock buyback, how they can create value to investor and how can they artificially inflate earnings per share. I learned how to calculate discounted cash flow to determine if what I'm paying for the companies today is going to be worth its value in the future. When I went to edit my video, I realized portion of my recording was in the wrong capturing mode. It was in the time-lapse mode instead of video mode. So now I have to re-record this portion of the video. If doing research on individual companies and sectors, reading their financial statement, listening on the quarterly earning is not your cup of tea, fear not. You can still invest in the stock market by simply purchase ETF, Exchange Traded Fund, VOO, which is an index fund that tracks the top 500 US company, S&P 500. Or you can buy VTI, which is Total Stock Market, another version of VTSAX. You buy all US companies. The chance of any of these two funds go down under where you lose all of your money is no longer just your money problem. It's the world problem. That means all the companies are going down under. You're not getting the high growth that you would enjoy with individual companies, but you are not taking the high risk by potentially buying the wrong companies. I believe Robinhood was the pioneer in bringing investing to the masses, to the retail investor like you and I, not just the institutional investors. At the same time, they brought what we call fractional shares. With fractional shares, it allows you to enjoy the growth of the market without having to buy a full share of a company or a full share of ETF. There is no shortage of discount brokerage firms out there that allows you to buy fractional shares of a company or fractional share of ETF. They can be Robinhood, M1 Finance, Fidelity, Charles Schwab, Webull, you name it. There are plenty of them out there. So there's absolutely no excuse or no reason why you cannot join the stock market. Even if you have just $50 a week, you can still invest in Netflix or Costco, where their price per share is close to $1,000 per share. $50 a week will buy you 0.05 shares of a Costco or a Netflix. It's not the full share, but you are still going to enjoy their growth. Even though it is 0.05% of a single share, if the company grows 50%, you are still growing 50% of your money. You're still growing 50% of your proceeds. This is not to say that I suggest you buy Costco or Netflix. It's just an example of how fractional share enables you, allows you to buy any share of company without having to have enough for one share. As I wrap up my walk and talk, I forgot to address the financial gurus out there that talks about don't worry about the latte factor. Don't worry about the little things. Worry about the big three, which is housing, transportation, and groceries. Yes, they are 100% correct. You should be worrying about those top three. But for my audience, for my people, those that make $15 to $25 an hour, there's only so much that we can cut those big three before we don't have a house to live in, a car to drive, or healthy food to eat. And once you get to the point where your income is so high and you don't have to worry about those little latte factor anymore, great, that's good for you. But what I focus a lot on this channel is not to give out blanket advice, because all of us have different profession, different background, different needs and wants, and different income and different expenses. Giving a blanket advice of don't worry about the latte factor, don't worry about the little things, is irresponsible. Because if you're making $18 an hour, you should be watching those little things because you don't have enough money to enjoy all those little comfort. You need to start cooking your own food. You need to start brewing your own coffee. Doing so will not only save you money, it will save your health as well. If you go to McDonald's, Wendy's, or Arby's, getting a value meal nowadays will cost me $10 to $15. And if you cook your own hamburger, it's a fraction of that. $2, maybe $2.50 at most, to get you 2 burgers with some French fries that you make at home. I hope you enjoy this format where I take you along my 25-minute walk, and at the same time, I talk about anything relating to finance and fitness with very minimal edit. Being a perfectionist, this allowed me to overcome that. I have a tendency to want to have everything perfect, everything aligned, all the colors coordinated, everything looks spot on. But I need to really get away from that. And secondly, it allows me to overcome imposter syndrome, where I feel like, who am I to talk about this subject? I'm not an expert. But what I have learned over the years is we don't have to be an official expert. We just have to know more than the people that we are sharing what we have learned. After finishing 3 days of walk and talk about finance and fitness, off the cuff, saying what I know, saying what I believe, I start to feel comfortable talking about these things without worrying about, is it perfect? Without worrying about, am I missing something? If there's one thing I have learned, and I hope you learned this too, don't let perfection be the enemy of progress. I know it sounds cliche, but It is true. Seth Godin has a book called The Practice, Share Your Creative Work. I highly recommend you reading that book. And that's the book that really inspired me to shift from corporate world into social media, to share what I have learned, to share what I know to the greater world, to make an impact. And what he talks about is the practice is to ship your creative work, your best effort at that time. It may not be your greatest work, but it is your best work. And that is something that I have to constantly remind myself. It may not be my best work. It may not be my greatest work, but it's the best at the time that I'm sharing it.